Welcome to the Deep Dive. It's May 10th, 2025, and we're looking ahead to the week of May 12th to the 16th. It feels like things are already, well, buzzing a bit.
Definitely. So today we want to kind of pull together what's been happening, especially today, to give you a clearer view of what might drive the markets next week.
Yeah, exactly. Think of this as synthesizing all that recent noise, trying to find the signal, and maybe giving you some, actionable ways to think about it.
Right. We're aiming for clarity, connecting some dots that might not seem obvious at first glance.
So four big themes emerged today, and they look set to dominate next week, too. First, those U.S. China trade talks. Always a factor.
Then there's key economic data. Inflation and retail sales are the big ones on the docket.
Plus, corporate earnings season is still rolling with some heavy hitters reporting.
And finally, you've always got the Fed speak, Chair Powell scheduled, and other macro cues to watch.
It's interesting, we already saw a bit of market reaction today, didn't we? A little positive bump.
We did. That followed the news about the weekend talks in Geneva. Treasury Secretary Bessent and China's Vice Premier He Lifeng actually meeting?
And discussing tariff de-escalation, which is, the key phrase there.
Exactly. Considering where tariffs have been, over 120% in some cases, President Trump floated 80% before, remember?
I do. And now the talk seems to be around the current average, about 145%? And trying to get that down.
Right. So even without a done deal, just the talk of bringing that 145% figure down, well, the market noticed today. Shows how sensitive it is.
Okay, so let's dig into that a bit more. These resumed talks, why now? What's the potential ripple effect here?
Well, the ripple effect could be pretty significant if something actually comes of it. Imagine tariffs dropping from that 145% level, maybe towards that 80% target or something like it.
What happens then?
The immediate thought is a boost for cyclical sectors. Think industrials, think technology, companies that rely on global trade, global supply chains.
So lower costs for them, maybe better export prospects.
Precisely. Especially, specific areas like precision machinery makers or semiconductor companies. Their international value chains are so complex, tariffs hit them hard. Lower tariffs could be a real shot in the arm.
Which implies maybe a shift away from the defensive plays we saw earlier this year. Staples, utilities, that kind of thing.
That's the thinking.
Yeah.
Earlier in 2025, it was all about safety. But real progress on trade, that could absolutely spark a rotation back into those growth-oriented areas. It's like unlocking potential that's been held back.
Makes sense. So if you're listening, who should you maybe keep an extra eye on?
Definitely companies with big export numbers, heavy industrial manufacturers. They'd likely see the most direct benefit if trade tensions ease meaningfully.
But, and this is the key point you made earlier, we aren't there yet.
Not at all. Today's little market move was just, it was a reaction to a hint of progress.
Yeah.
Shows how closely everyone's watching. Any signal, positive or negative, gets attention.
Okay, let's pivot to the economic calendar then. Tuesday, we get the April CPI, Consumer Price Index. Why is this one so critical right now?
Well, CPI is always important, but this time especially because we've seen some signs of rising input price pressures recently. Hit a 7-month high, actually.
Input prices,
Yeah.
so costs for producers.
Exactly. Raw materials, services they buy. The big question is, are those higher costs getting passed through to us, to consumers? Is inflation heating up again?
And the consensus forecast is what?
Around 0.3% month-on-month rise is the general expectation.
So what are the potential market reactions? Hotter versus cooler?
If it comes in hotter than 0.3%, you could definitely see worries flare up again about the Fed. Like maybe they can't just pause rates. Inflation might be stickier than they hoped.
Okay. And if it's cooler or just in line?
A cooler number, or even just meeting expectations, might sort of cement this higher for longer narrative. The idea that the Fed keeps rates where they are for a good while to make absolutely sure inflation is tamed, even if growth slows a bit.
Got it. Then later in the week, April retail sales. How does that connect, especially with the whole tariff discussion?
Retail sales give us that direct pulse check on the consumer. Are people still spending? Tariffs, remember, can make imported goods more expensive.
Right.
So this data tells us how resilient spending is in the face of those potential headwinds. If sales slow down noticeably, it could add fuel to those recession worries that are always simmering.
But stronger sales could be good for consumer discretionary stocks.
Potentially. It would suggest consumers are still willing and able to spend, even with some price pressures.
So these two data points, CPI Tuesday, retail sales later, they're really going to set the tone, aren't they?
Hugely influential. The Fed will be watching like hawks, obviously. It'll shape their commentary. And you'll see it reflected in the bond market, too, in yields, depending on the inflation and spending signals.
And didn't we hear today that the Fed itself is worried about tariffs possibly stoking inflation and hitting growth?
Exactly. That news today just makes these upcoming data releases even more pointed, even more critical for figuring out the Fed's next steps and, well, market direction.
Okay, let's talk earnings. Big week there, too. Who's on the radar?
Oh, yeah, quite a lineup. Walmart reports Tuesday, always a massive bellwether for the consumer, right?
For sure.
Then midweek, you get this cluster of big tech and related names. Tesla, Palantir, Alibaba, Tencent.
So important for sector leadership, tech trends.
Definitely. For Tesla, everyone's watching for updates on the robo-taxi stuff. That seems to be driving sentiment. Palantir, you mentioned strong bookings recently, so investors will want confirmation that momentum's holding.
And Alibaba, Tencent, a window into China.
A very important one, yeah. Their results tell us a lot about the health of the Chinese consumer and the tech scene over there.
Sounds like we should probably brace for some volatility around these releases then.
I would expect it. These are big companies. A significant earnings beat or a miss can really move the needle, not just for the stock itself, but for related ETFs and the whole sector sometimes. It often sparks a lot of trading activity.
And tying back to the broader economy, we got that labor productivity number today, a drop in Q1. How does that fit in?
Yeah, that was interesting. A 0.8% annualized drop in productivity. That's significant because, well, if companies are getting less output for each hour worked, but they're still paying for that hour.
Unit labor costs go up.
Exactly.
Oh.
Which can squeeze profit margins. So when we listen to these earnings calls next week, it's not just about revenue and headline profit. It's about listening for commentary on costs, on margins, especially labor costs. That productivity dip adds another layer of scrutiny.
Although on a slightly brighter note, wasn't there some positive news on office leasing today from JLL?
There was, yeah. A reported rebound. Seems specific, but it could feed into the outlook for commercial real estate companies, maybe service providers to offices, another piece of the puzzle.
Okay, last major area, the Fed and the macro view. Chair Powell speaks Wednesday and Friday.
Correct. And the drill, every word gets dissected.
What are we listening for specifically? Any shift in tone?
Any hint of increased concern about inflation sticking around? Or maybe conversely, any rising worries about unemployment? If he sounds more hawkish, leaning towards tighter policy that could push bond yields up and maybe put some pressure on stocks.
Higher borrowing costs, slower growth fears. The usual
The
reaction.
usual chain reaction, yeah.
And besides Powell, other data points to watch?
We also get producer prices, PPI, which is another inflation angle from the wholesale side. Industrial production figures, giving us a read on manufacturing, mining, utilities. And the Michigan Consumer Sentiment Survey.
So feeling out the broader economic picture.
Exactly. All feeding into the narrative before we get that 10-year Treasury auction on Friday, which is always a key event for the bond market.
It's funny how that Morningstar newsletter mentioned today tied things together, talking about whether tariffs could push CPI higher.
Right. Directly connecting to the data we're waiting for.
And featuring bond market insights on yield strategies, it all loops back.
It really does. The tariff inflation link, the Fed's reaction, the impact on bond yields, it's all one interconnected system that investors are trying to navigate.
So let's try and synthesize this for our listeners. Thinking about portfolios heading into next week, what's the main takeaway?
I think the main thing is being ready for, well, possibly conflicting signals and the volatility that comes with that. It's this tension between playing defense and maybe leaning into offense.
How so?
Well, if CPI comes in really hot, that might favor those defensive sectors against staples, utilities. People might get nervous about the Fed.
Okay.
But if we get good news on trade or surprisingly strong earnings from cyclicals, that could swing momentum back towards industrials, tech, consumer discretionary, the growthier parts of the market.
So pay attention midweek especially. That seems like the crunch point for data and earnings.
Definitely. Manage your overnight risk if you're actively trading around Wednesday or Thursday, and keep a close eye on bond yields. The Fed's tone and that inflation data will really dictate where yields go, which impacts how you might want to think about your bond allocation, things like duration and credit risk.
Okay, so summing it up, a really pivotal week ahead. We've got the U.S. China trade dance continuing.
Always delicate.
Crucial inflation and retail data shaping the economic outlook and Fed thinking.
Absolutely vital read.
Big earnings reports giving us company-specific insights and sector clues.
Yep, lots of potential movers there.
And the Fed's voice, plus other macro data, coloring the whole picture.
It's a lot to track, But understanding how these pieces fit together is going to be key for navigating next week.
Which leaves us with a final thought, perhaps. Given that drop in productivity we saw, alongside the potential for tariffs to push inflation up,
Yeah.
how might businesses, and maybe consumers too, need to adapt their strategies or behaviors if both of those trends persist longer term? That interaction seems potentially quite challenging.
That is a really good question to ponder. Productivity and inflation moving in unfavorable directions simultaneously.
Yeah.
Yeah, that requires some real